Good morning and welcome to yet another fun-packed edition of Join the Dots. Now I'm recording this Monday morning. Why? Because I didn't want to lose a piece that I saw this morning that I thought this is excellent both to watch and to comment upon, to give you real information, real facts and real opinion on what's about to happen next. Now, over the last 4 or 5 days, I've given you an incredible amount of information on gold and silver. And I think the confusing market is the treasury bond market and the bond market generally, government bond markets, okay? Now, this is why this piece is so fundamentally important, and I didn't want to lose it over the next 2 or 3 days of noise and news and MSN lies and whatever. I thought, no, let's make this piece now, even though I'm making it Monday, because I don't trade. I don't care what the price is. Having said that, silver is 43.66 as I speak, and gold is 3,718 as I speak. So let's use those numbers to explain what is actually happening in my world, the world I want you to understand through joining the dots, okay? We need to join the dots. And the dots are going to be distractions for you, and they're going to be portrayed in totally the wrong way, because we are now going into Exeter's inverted pyramid territory, where that pyramid turns upside down, and what was perceived as safe and liquid becomes unsafe, and what was perceived as risky becomes safety and the most liquid. So it's one piece from Eurodollar University, and sometimes it's really good to just concentrate on one piece, because that way I can still join the dots. I can bring in my thoughts and opinions from lots of other pieces and other people's opinions. But it's good to just have one piece for you to watch. You can just watch one video, see my comments that I make now, or listen to my comments, and put the two together and see if you can join the dots. So here we go. It's Eurodollar University. Foreigners buying record amounts of treasuries. Yes, they are. And I've hinted in a few videos recently as to what I think is happening, which is completely different to what these commentators think is happening. But the first thing Jeff starts with, and I like Jeff Schneider, I really do. The first thing he starts with is park your politics at the door. They have no place in economics. And if you can't de-Trump or de-Democrat or de-this or de-that or de-China, then you ain't going to get the truth, and you're not going to understand what's happening, and therefore you're likely to lose more money. Okay? Park your politics. They're nothing to do with this. This is a global financial inversion that cannot now be stopped. So there are no politics. In fact, they'll just make it better for you if you see the right game, if you see the right tactics. Because everything they do will be flailing. As I've said to you before, when politicians fail, they start to flail. Their arms, their legs, their policies, their decisions go all over the place. And that causes more uncertainty and causes more safety required. So let's start with just peace. And I'm starting at 7 minutes 50. Jobs, 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 and jobs. Told you before. Look at the jobs. The jobs are key. The jobs tell you where the economy is going. The data is just fudged. It's CPI lies, it's 110,000 at United Britain, it's absolute garbage. Garbage. So you have to look at what is key. Jobs. Okay, so then we go 8 minutes 30, they talk about the China crisis. Honestly, this is so relevant and so important to you and your money and your future and your planning. China is in an implosion. And what's happening in China now is that the bond rates, I think the 10-year is around 180 and the 30-year is around 218, 220. They can only go up, can't they, those rates? They can't go down. But banks in China are absolutely leaping all over the bond market, even at 1.8 and 2. Why? Because every other part of the market is collapsing. It's collapsing. So the banks say, we need safety. We need some safety. At least the government will repay us, but none of these industries, none of these companies, none of the 120 EV car manufacturers in China, 120, they might not be able to repay us. Just like the 120 or 150 or 300 property development companies that are now all in liquidation or very close thereto. Just a cycle. But it's a massive overinvestment cycle, first of all in property, now in EVs. Okay, it's a massive overinvestment. So the banks are looking for safety, and the government encourages them to look for bonds because the government needs to sell bonds and no one outside China wants to buy them. Who wants to buy a Chinese bond, a 30-year bond at 2.2? Who? Can you see it? No one. So, but what happens when all the banks, and this is happening in the US now as well, what happens when all the banks in all the countries around the world say, do you know what? We need to be safe. We're going to buy bonds, government bonds. Well, where's the money for the economy? Where's the money for companies renewing their bonds? Where's the companies looking for money to promote investment, research, development? There's none. There's none for them. Maybe the top 5 or 6 companies, the AI, maybe the AI mob. Yeah, maybe they'll get funding, but who else? Who else? Will retailers get it? Will commercial real estate developers get it? Will commercial real estate lease holders get it? No. No. The economy will contract. We go back. Jobs, 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 jobs. So, the banks are buying all and any bonds. This is in China. They need to. And I think they're told to. As there are no other buyers. I just explained it. And that leads to systemic crowding out. Again, systemic crowding out. The real economy gets no option to borrow. The money is all funneled into the bonds. Which, the economy is in near total distress in China. I've told you, there's 120 plus EV makers. They reckon that 20 might survive. It's the same with Evergrande, wasn't it? There were 100 plus property developers. Now how many are left? Very few. And most of those are on the edge. Okay? So, in China, house prices are falling. Mortgages, difficult to get. Empty properties everywhere. Consumers with 2 or 3 mortgages. Makers of 120 plus EV companies going to go bankrupt. Consumption falling off a cliff. Consumers buying gold. And that's why we see it this morning at 3718. China is buying gold. Chinese people are not stupid. Whatever the government does, Chinese people are not stupid. They will buy gold and silver because they know what's safe. And they won't tell anyone either because they need to keep it safe. So thinking it through with 10-year bonds at 1.8 and 30-year bonds at 2.18, if a bank stop buying, where do these rates go? Where do these bonds go? They go up if the bank stop buying. But if the bank doesn't stop buying, it's got no money for the economy. Catch 22. Joseph Heller. So the government needs to continually renew and issue yet more bonds. Liquidity becomes king. And here we go, Exeter's inverted pyramid. Everything turns upside down. So I'll link Exeter's inverted pyramid episode, which I produced, or my son produced, I delivered maybe a month ago. So what is the new safe? What is the new safe? It's gold. It's gold. Gold is the new safe. What can you sell easily? Gold. What's going up? Gold. So after 10 minutes of this piece, why bonds are, at this point, the chosen safety liquidity protection. I understand. But that crowds out the real economy, doesn't it? And there's no money for business. More especially those that are in a bit of trouble anyway. I mean, obviously the economy's slowed right down. Consumption is slowing all over the place. American consumers are signalling now that they have They have plans to spend less in the vital holiday period that's coming up, Thanksgiving and Christmas. They are vital periods for the American consumer and the American market. And all the consumers are signalling they're going to spend less. Of course they are. And they're going to worry about their job, aren't they? Because as they spend less, more jobs go. It's not rocket science, it's just joining those dots. So the system then looks for even more safety, doesn't it? Because it's now got companies laying off people. Or first of all, people work less hours. Okay, first of all, they're told, well, look, you know, we only want you for 40 hours. We don't want you for the 48 or 49 or 52 that you've been working. And that reduces their income and that reduces their spend. And it's the marginal spend, isn't it? It's the spend they have to do things, nice things. They can't spend it. They can't go out for meals. They can't do this. They can't buy presents. Because their mortgage and their car loans are absolutely their basic salary. And those are both stressed. Mortgages and car loans are now stressed in the US. So bonds will rise initially, but safety and some greed will lead more and more people to gold, silver, etc. And remember my last 4 or 5 episodes, I told you the clever people in the market are all now saying 10 or 20% gold. And it's 1% still. 1%. How many institutions are now going to start marketing ETFs in gold and silver? They need to earn commission. And as people sell their bonds or their stocks as they try and raise cash, and they think, I want to go into something more profitable, okay, the institutions are going to go into the gold and silver markets, the 2 times market, the 3 times ETF. They're going to go in there. It's going to get very exciting and very dangerous for some. We know the fundamentals are much stronger than the short-term price rises. We know the fundamentals are massively stronger for gold and silver because everything else, all the other dots are falling apart. So we know this is a dot that people are going to respect and want. And that demand for safety and liquidity is now accelerating. And remember, I'm saying all this on Monday morning. What the week does in the market, I don't really care. I really don't care because I know where the journey is. I know where the journey's going. And soon, that journey will look as if it's upside down. Yes, Exeter's pyramid, link it. I will link it. What will be seen as safe and liquid in this new market will be gold and silver. So 11 minutes 54, there's a picture that I'll link here that Eurodollar University put on this presentation. Beautiful picture. Everyone says equities are overvalued, so they're piling in. Yes, they do. And I've told you before, you always have a blow-off period at the end of an equity boom. There's a blow-off where the public come stampeding in. They're not being told about gold and silver. How many times have I told you that? Bloomberg, CNBC, Wall Street Journal, FT, they're not telling you about gold and silver. They're telling you about the stock market hitting an all-time high. They're sucking in the people who aren't thinking, who aren't looking carefully. They're sucking them in because they need to get out. And the only way you can sell in a market is if there's a buyer on the other side. So they're sucking the public in and they'll spit them out. That's what they do. It happens every crash. Jobs, jobs, jobs. And as I say, the consumers are saying the holiday season, we're going to spend less. So imports will be cut, won't they? Oops, China. So we know China's property market's gone. We know their consumption is struggling. And Americans going to buy less. That means China's exports will go down. There you go. The three legs of a Chinese economy stool, gone. What's left? A stool. Thanks very much.